Hello, it's Mr. Intermarket Analysis covering the FTSE 100 for the week ahead. Obviously the week starting from the 4th of November onwards. Okay, so let's just cover the week that's gone past. Given the fact that we've had quite a thrust, well, not a substantial thrust higher, but we did move higher initially, obviously topped out around the 6820 level, which the weekly chart obviously clearly defines that and explains that. We are having topping tails, so obviously this is something that should be a concern to any bulls out there at the moment, given the fact that the tapering is back on the table now for December. Obviously it's all about the Kool-Aid right now. The reason why we had quite a substantial rally is because one of the BOE members did state that QE was still a probability. It's not been taken off the table in the UK as well, so and the fact that the market was juiced up and euphoric state, wanted to move higher, etc, etc. So the FTSE 100 certainly is putting in a potential topping tail here, but the argument against that based on fundamentals is the fact that the Eurozone is now going to start doing QE, given the fact that you've got deflation concerns in Germany and across the Eurozone, and exports are getting hit with the Euro approaching almost approach 1.4. It fell around the 1.3850 region, so the fact that they're talking down their currency will help their exports, which in turn will most likely drag the FTSE higher as well. So there's fundamental arguments for and against. Okay, based on the charts alone, which obviously I'm discussing right now, it is a topping tail, so it's a concern. You had a 4-bar move higher with a topping tail, and obviously we've held that resistance level around the 6750 level and failed to close above, so that's something of concern for the bulls. So that's something to bear in mind in the larger time frames. Let's go in and into the daily chart. Okay, so daily chart, obviously we had this topping tail again, classic reversal, bearish engulfing candle. We've had an inside bar obviously on the Friday, which generally means if the market consolidates in the lower 25% of the previous candle, which obviously is a bearish engulfing candle, red candle, then there's an 89% probability that the market continues to move lower. Okay, so like I said, on the small time frames, there is a HNS formation targeting the 6700 level, which I'll discuss with you shortly. Okay, but yeah, inside bar on a Friday, so bulls can't get excited here. Okay, it is a concern. Okay, until we take out the pivot high, which is around the 6778 level, or the bearish engulfing upper body, then and only then can we actually start to really become bullish and expect the topping tails to be taken out, and off we go to 7,000. What's my view? Do we see 7,000 this year? Yes, we do. That's my view. Given the fact that based on the premise that more than likely tapering is not going to occur in December, even though they put it on the table because they wanted to take a lot of hot air out of the market, given that the Nasdaq was hitting multi-year highs, S&P multi-year high, the Dow transport still bullish at present, and the Dow obviously holding triple top resistance right now, which I'll discuss in the US market weekend analysis. But for now, let's just stick on the FTSE. Okay, but there are intermarket relationships that you must respect. Okay, so daily chart like I've already summarized. If we do obviously continue to move lower, which more than likely, given the fact that we've got a bearish consolidation here, 6700 level will be support, and 6660 level, 2 levels of support to watch out for. As technical analysis states, previous resistance equals support, therefore that's the reason why. Okay, so they're levels that you observe. Now let's go to our smaller time frames. Okay, so let's look at a 10-minute chart of the FTSE 100. This should be interesting. Okay, so let's see where we are here. Okay, and so let me just delete some of these lines I've already, or some analysis that I've been doing. So that's no longer relevant. That's no longer relevant. Okay, so this is let's just go to a 60-minute chart first of all. Okie dokie then, so basically what are we observing here? Okay, so like I discussed before, there is an unfilled gap around the 6560 level, so that does need to close. All unfilled gaps eventually close, so always bear that in mind. Okay, and let's have a look. So we've got an unfilled gap here at around the 6680 level. Okay, so that's something that certainly needs to be looked out for. But from my perspective, the larger, I've been looking at this now, and really what the major pattern that we're probably observing right now is this pattern here. Okay, this is the H&S formation. Okay, if the market obviously continues to move lower, first of all we need to hit this target here. So this target here is around the 6,700 level, which I've already explained. You've got horizontal support here, larger time frames just explained. 6,700 equals previous resistance equals support. Okay, you have a bearish engulfing, well, bearish consolidation here. Bear flag scenario, next level on the way down is going to be 6,700. So that's something that we certainly need to keep an eye out for, which obviously is the H&S target as well, which I've already explained. Taking the upper head at around the 6,820 level, from the neckline around the 6,760 level, projecting 6,700 on the downside. Okay. Now, obviously, if we do fail to hold 6,700, the next level is going to be the 6,660 region, which again coincides with this horizontal support here, and the fact that you have the larger daily analysis or daily chart stating that 6,660 previous resistance equals support. Okay, and obviously you have the larger H&S, so you've got the left shoulder here, you have the major head here, we're consolidating here, right shoulder here, and then obviously we move lower if the market really does accelerate to the downside. If we do that, then obviously you've got the 6,820 level, you're taking it to the neckline, which is around the 6,720 level. Okay, so that's something that you keep an eye out for. If we project this move on the downside, let's just focus on projecting this lower. Okay, again, obviously 6,720, so basically let's just say call it 6,720, project it minus 100 points down, that equals the 6,620 level. So again, around this region again near the 200 MA, by then the 200 MA will be sloping upwards. So all projected targets in the 60 minutes. So 60 minutes telling you there's the H&S formation or multiple H&S formations now, so therefore bias is down. The 20 MA obviously has gone below the 50 MA, therefore momentum is bearish right now, and you're expecting a move lower or thrust lower. Okay, so and this will be confirmed in the US market analysis, which I'll explain later on as well. Okay, so looking for going into next week, looking for potential bearish momentum, given the fact that we already have at present. The only thing that can derail that, remember that, is the fact that if we do get further comments regarding a negative interest rate or a cut in interest rates in the Eurozone, Mr. Nowotny coming out again firing his bazookas with regards to QE in Europe, then obviously this whole pattern can be negated, which a lot of the bearish patterns have been negated, as we're already aware, when the markets were inflating higher and obviously on the QE juice. So QE juice negates all bearish patterns, so that's something that you must respect. But as traders, we can only adhere to price action and fundamentals at the time. It's impossible for you to take into account QE because it's an exogenous variable. If it has an impact, it has an impact, and it will negate all bearish patterns. Okay, so yes, so remember those patterns, or remember those targets now for next week: 6,620, 6,660, 6,700, all areas of immense support. Anywhere around that zone, as a day trader, I'll be looking to potentially, if I'm not short, or if I do manage to catch a short on the downside, that's fantastic. But they are going to be areas that I will potentially look to cover and look to buy the bounce higher. Okay, so let's go to a 10-minute chart, which is quite interesting. Okay, so why was the FTSE strong on a Friday? Okay, mainly predominantly because of Vodafone. Okay, Vodafone shares have been doing well. Potential bid there. I think there was some bid news or some buyout news, etc., which kept that afloat. Okay, so that's something that we certainly keep an eye out for. Now, the 10-minute chart is giving you an alternative picture. 10-minute chart really is supporting the thesis or the theory that the QE trade is here, basically, and the QE trade, given the Eurozone, etc., and then the DAX obviously holding up. Okay, we certainly are looking to project higher. We could more than likely are building a base here, looking to move higher. Okay, potential IHS formation potential. We have built a base here around the 6,720 level. Obviously, it's quite a substantial base now, predominantly due to QE, etc., etc. And then obviously, if we do get thrust higher from here, potentially move back low again to create a right shoulder, then obviously off we go to the race on the upside. So I certainly expect this 6,775 gap to be closed. So maybe we close the gap here, thrust higher, close the gap, and then boom, lights out. Okay, down to 6,620, 6,660, and 6,700. So certainly something to consider and take into consideration. Okay, so alternatively, you do have this downward sloping trend line Therefore 6750 and 200 MA 6760 will act as immense resistance, but like I said, unfilled gap, once we close the gap, lights out. Okay, so that's something that we certainly keep an eye out for. Having said that, larger time frames always take precedent. Therefore the weekly chart is topping tail, the daily chart topping tail, bearish engulfing bear flags scenario, and obviously a 60 minutes is a HNS. So if you have an IHS on a 10 minute and a HNS on a 60 minute, which one do you go with? You always go with the larger time frames, therefore HNS on 60 minute, and obviously you've got that confirmation of bearish momentum on the larger time frames, so that's always something that we take into consideration. Okay, but having said that, remember folks, QE trumps everything. Okay, so if the QE juice is out there, it doesn't really matter which negative pattern you have. It's a shame, it's unfortunate, but the patterns get gazumped by the central banks. Okay, now as traders, what can we do? We always adhere to our obviously strategy and trading plan. If HNS is there, we trade it. If IHS is there, we trade it. Obviously they don't succeed 100% of the time, so what? Okay, as long as they give you 70-80% success, that's good enough, folks. Okay, that's good enough. Okay, so yeah, I'll call it a day there then. Always remember, risk on, risk off, wax on, wax